Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin chart, do some TA, look at various time frames and also take a look at market cipher. So I want to start here on the weekly time frame. There is still a couple of days left before we close this current weekly candle. We're just going to look at some key levels here. We do have this white trend line connecting the overall lows, and we also have this golden pocket area when doing the fib retracement from the 29k low to the 69k high. And these are two key areas we're looking to reclaim to flip bullish on a macro scale. We can see currently we are slightly above this golden pocket area, which is between 42.8k and 44.1k. And upon next week's candle open, this white trend line will be sitting at around 45,870. We do also have this order block here in blue from this green candle in a downtrend. These are areas of supply and demand. There were buyers and sellers here, and this becomes of interest later on when we interact with it. It can act as support or resistance, and we do look for the candle body closes. So we can see on this attempt to break above this order block, we got rejected and we got pushed back down. So we are attempting to get back above this order block. The top of this order block is at 43,100. So we'll have to wait for this weekly candle to close, but these are the key levels we're watching. If we do end up closing back inside this order block or below it, it would show a weakness and possibly it's going to act as resistance and we are going to get pushed back down. Also watching this 50-week moving average in yellow, you can see we've gotten quite close to it. Currently it's sitting at around 45,800. And upon next week's candle open, it will be pretty much in line with this white trend line. And we're watching that because in the previous bear market in 2018, we can see once we broke that 50-week moving average, we came back up and retested it and acted as resistance, and we continued the bear market. So if we are able to reclaim it with our current price action, it could give us more confidence that we're still in a bull market and we're going to push higher. We do also see with the 2018 bear market how important these weekly order blocks were. We saw this red candle in an uptrend. This order block acted as resistance on this dead cat bounce. And also this order block here from this green candle acted as resistance on this dead cat bounce. And finally, this order block from this green candle acted as resistance on this dead cat bounce. So if we were to do a similar thing, perhaps this order block may act as resistance here. We do have a couple more higher up here, just below 50,000. But it's just something key to watch. And obviously, if we can get above all of these order blocks, I would flip quite bullish. Looking at the RSI, we're also watching this blue rectangular box, which is between the 50 and 55 level. And we can see it's a key level to determine bull markets and bear markets. In the 2016-2017 bull run, we used this area as support once we were above it. During the whole bull market and during the bear market, it acted as resistance once we broke below it, acted as resistance all the way down. So we did actually break below it here on this drop from the 65k to 29k, but we can see it didn't act as resistance here. We got back above it and we even tested it for support, acted as support. Once we did get back above it again, it did initiate higher prices. So this is a key area to reclaim on the RSI. We are quite close to it at the moment. And if we are able to break above it, it could indicate a continuation of a bull market. And we could possibly come back down like we did here to test it for support. And if we were to get back above it after testing it, that would give me a lot of confidence that we are still in a bull market and possibly looking for new all-time highs. The stochastic RSI still looks quite good here. And upon next week's candle open, perhaps we get above the 80 level, this white dotted line. And this is the bullish control zone where we can see some more explosive price action to the upside. But the RSI is the main thing I'm watching, and also this 50-week moving average. Also watching the weekly EMA ribbon here, which is a collection of moving averages. And whenever we have opened and closed the candle, including the wicks below this weekly EMA ribbon, has indicated that we are in a bear market. Just to show you that quickly, we can see in the 2018 bear market, we opened and closed a candle with the wicks below it. It did initiate the continuation of the bear market. During the 2017 bull market, we can see we never closed below the weekly EMA ribbon. So this cycle does seem quite different. We didn't get a blow off top, instead more of this double top, but we are still making weekly higher lows and higher highs. And if we are able to open and close a candle, including the wicks, above this weekly EMA ribbon, that would give me confidence that we are going to push higher, and perhaps we are still in a bull market. I'm also watching the weekly Ichimoku cloud here. This can act as support on pullbacks when it's green, and the thicker the cloud, the stronger the support. We can see zooming in, it has been significant here. We have gone to the top of the cloud here, got rejected, and the bottom of the cloud has acted as support. Looking at the candle bodies here, now we have pushed up from it. And on next week's candle open, the top of this cloud will be at around 47,300, also in line with this weekly order block. And this is that 50-week moving average in yellow. And again, if we are able to open and close a weekly candle above this cloud, including the wicks, it would give me confidence we're still in a bull market and going to push higher. Conversely, closing below with the same conditions would indicate continuation of a bear market. And down to the daily time frame now, we are looking at some fib levels here, looking at this retracement from this high to the 33k low. We do see the golden pocket on this bounce. It's quite often an area we get rejected. We can see it's acted as resistance on all these attempts higher. Currently, we did wick up into this golden pocket, so this would be a key area to reclaim on the shorter term time frames here. And if we are able to do that, it would also indicate that we have gotten above this triangle pattern, just joining the overall lows and the highs here. And we do also have another fib level here. This is looking at the overall retracement from the 69k high to the 33k low. And this is the 382 level at 46.7k. And in a bearish market, quite often the 382 level will act as resistance. So this would be a key area to get back above when looking at the overall fib levels. Another thing I'm watching is the 50-day moving average in yellow and the 200-day moving average in red. We can see we've gotten above the 50-day moving average. We tested it for support and we did get this nice bounce. The key moving average to get back above is the 200-day moving average, currently at 48,300. And we're watching that because looking back at the 2018 bear market, we can see once we got the death cross here, which is the 50-day moving average crossing below the 200-day moving average, on all the bounces back to the upside, we weren't able to reclaim the 200-day moving average, and we continued in the bear market. So we do need to see Bitcoin reclaim this 200-day moving average, quite like we did on this recovery. We see we got back above the 200-day moving average. We stayed there long enough to initiate a golden cross on the other side, with the yellow crossing the red line, and that's a good sign that we were going to push higher. So if we are able to get above the 200-day moving average and spend some time there, long enough to initiate a golden cross, that would also give me a lot of confidence that we're in a bull market and we're going to push higher. Looking at some daily order blocks now, there are quite a few here. In the previous video, I think we were on this candle here, and we were looking for the candle to close above this order block, and we can see it did close just above it. We did come back to test it with this wick, and then we did close this daily candle also above the order block. And I said, if we can do that, then I'd be looking for this higher order block as the next target. And we can see we have come into that order block. And the same thing again, we need to see this daily candle close above this order block at around 44,620. And if we are able to close back above it, perhaps test it with a wick and close that daily candle above it, we'd look for these higher order blocks, which come in at around 46,000. But we do see this order block has been significant and has been acting as resistance on all these attempts higher. So it is a key order block to get back above. And if we do close below this order block, below 43,880, I would expect us to come back down and test this order block between 42.2k and 42.4k and try to use this as support, flipping previous resistance into support. Do want to talk about one other thing I haven't spoken about before, known as a swing failure pattern, also known as SFPs. What these are basically, when looking at candlesticks, we can see on this candlestick here that we did a wick higher than the previous candles, but the candle ended up closing red. This is known as an SFP. We swung the previous highs, but we closed red, and these can indicate local tops or local bottoms on the other side. We see with this green candle, we did swing all the lows with the wick, but we did close green. That did indicate a local bottom, and we did go higher. We also see on this candle we did a similar thing. We wicked above the previous highs, but we closed red, and that indicated a local top. So they're not perfect, but it can be used as a warning sign, as a possible local top, and maybe an area to take some profits on a long position, just to protect that possible risk. Looking back at this candle here, we did see we did swing the high, we did close red, but we did end up going higher. So it's not perfect, but we do see it play out quite often. So with this current daily candle, we can see we had this wick higher, did swing the previous high. If this candle does end up closing red, which would be closing below 44,000 approximately, then we would have an SFP here, and perhaps we're going to get a pullback. These SFPs are even more significant when they swing the previous highs going further back. So if we were to swing this high at 46,000 approximately, and then come back down and end up closing the candle red, that would give more confidence of a local top and a correction back down. Just something else to look out for. Another thing we're watching is the RSI on the daily here. We did have a triangle pattern drawn on the RSI. We did see it with the previous daily close. We did close above this trend line, and that could be an early indication that we are going to break above the trend line on the chart also. So that is bullish. We do see the stochastic RSI still above the 80 level, this white dotted line, and this is still in the bullish control zone. So until we break below that 80 level, we do have to remain bullish looking at the stochastic RSI. And finally, taking a look at market cipher, we're going to start on the daily time frame and look at the more higher term time frames. We can see on the daily, we were in the red money flow here, indicating money was leaving the market, and we did flip back into the green money flow on the 18th of March. So this is a bullish sign. Do see the green wave going up here, showing money is coming into the market. And comparing that to the previous consolidation here between 30 and 40k, we saw we were in the red money flow for quite a long time. We flipped into the green here around this point, and money came back into the market, and we did end up going a lot higher. So that is a good sign for the bulls. And looking at the weekly time frame now, we were watching the green money flow here. It looked like it was going to go into the red. We can see we were very close to this zero line. We have ticked up a little bit here, so we haven't entered the red. The blue wave is starting to come up here after this green dot on the 28th of February. It would be good to see it cross the zero line to get more bullish. But just looking back at the previous cycles here, you can see whenever we went into the red money flow, it did indicate continuation of a bear market. This is 2014-2015 bear market. This is the 2018-2019 bear market here. Once we got into the red money flow, did initiate lower prices. So for the time being, that has been saved here. But if we do dip into that red money flow, I would expect continuation of the bear market. We do also open a new 2-week candle at the end of the week, and have been watching this blue wave has been coming down here. Looks like it's starting to close off, and perhaps we're going to get a green dot here, and this could be quite significant. Just looking back, the last green dot we got here below the 0 line was at the start of the bull market here in April, and did result in quite a big movement to the upside. The previous one did start movement to the upside, then we had the stock market crash, obviously, but there's no guarantees. Looking back at the 2018 bear market here, we can see we got that green dot, but then the following 2-week candle resulted in a red dot, and we did continue lower in the bear market. So if we do get a green dot on the next 2-week open in a few days, we have to take that as a bullish sign, and when we do see a red dot, then we'll have to take that as more of a bearish sign and a possible continuation of a bear market. I think that's about all. Try to make this video a bit quicker. Again, we'll be watching this daily close. If it does close red, again below 44,000, this would be an SFP, and we might get a pullback like we did on the previous 2 SFPs. If we are able to close above this triangle pattern and also above this order block, above around 44,620, that would be a good sign that perhaps we're going to push higher towards these higher order blocks starting at 46,000. And again, with that weekly close, we're looking to close above the golden pocket, above 44,150. And even better on the next week's open to close above this white trend line, which would be above around 45,800. So I think that's about all. Hope you enjoyed that analysis. Thanks for watching. I'm Bitcoin Mamo. See you next time. Bye.